Hello, my name is So Ahn, and I'm a co-portfolio manager of Mirae Asset Asia Great Consumer Equity Fund. Today, I would like to share about why we believe the rise of the Asian consumer and middle class is a long-term sustainable trend that will define the region's economic growth and development in the next few decades, as well as how the consumption trend has changed after the global pandemic. Asian consumption theme may sound very familiar to many investors who may feel that it is a well-known story. Asian consumers indeed have emerged as the largest consumer group across different consumer segments. For example, Chinese outbound tourism expenditure already outpaced that of the US as the largest spender globally in 2014, and the amount has more than doubled since then. More importantly, the number of passport holders in China still hovers around 10% of total population, meaning penetration is still very low. Similarly, the urbanization rate is only 35% in India, and thus the overall consumer penetration, including basic staples products, are still very low, meaning we're still at the early stage of a growth trajectory. Population really is an important base, and on top of this robust growth of economy, enabling more people to become affordable consumers in populous countries, particularly China and India, which are really the pivot of this Asian consumption theme. This vast size of population is the reason why Asian consumer market has already become big in terms of revenue or market cap size-wise. And it is also the same reason why we are still at the early stage of this structural growth story ahead. Asia has the world's largest population by continent and thus a hugely diverse population. Therefore, the consumption story differs from country to country and region to region. This is because each country has its own level of economic development, regulation, culture, consumer behavior, leading to different attractive investment opportunities. One example is online retail. E-commerce is growing rapidly across different countries in the region, particularly after the pandemic. And we have been investing in leading e-commerce operators in China for many years. Yet, we have not had exposure in India, where e-commerce industry is also growing fast. This is because the top two players in India are either a foreign company, Amazon, or a local company, Flipkart, acquired by a foreign company, Walmart, which takes over 80% stake. In addition, Chinese e-commerce market has become more diversified in recent years with the emergence of Pinduoduo as well as stricter antitrust regulation by the government. On the other hand, we see Korea's e-commerce market starting to be consolidated. The Korean e-commerce market has been a very fragmented industry for many years. The leading companies started gaining market shares through innovative services tailored to local consumers. Online retail sounds an attractive investment theme with robust growth in many markets, but whether we can find the right company as a direct beneficiary to ride on that theme is a different story. China has been first in, first out of this COVID-19, and thus we're seeing consumption reaching more normalized or pre-COVID-19 level across different consumer segments. Yet, the country has not fully opened its border for international travel, and thus domestic tourism as well as duty-free business in China have continued its robust growth since last year. China's duty-free market was only $8 billion or 9 to 10% of the $85 billion duty-free market in 2019, while Chinese spending accounted for about 40% of the global market according to JP Morgan. The industry is getting strong government support, particularly in Hainan province, as China aims to repatriate overseas spending back into domestic market. The COVID-19 has accelerated the repatriation pace as suspended international trips have forced Chinese consumers to shop in the domestic market. This has led to changes that global luxury brands such as LVMH, Hermes, and Estée Lauder are taking Hainan much more seriously than in the past. In addition, Chinese consumers are increasingly willing to spend more time on experience rather than shopping when they travel overseas. Thus, development of China duty-free industry also satisfies consumers' needs. Thus, we expect travel retail industry in China may continue its robust growth even after the global pandemic, supported by Chinese consumers, luxury brand owners, as well as the government. Another strong consumer trend we see is rising demand of local brands in various sectors, especially in China. Young Chinese consumers have grown up amid strong economic growth in China, and thus they're very proud of their country, i.e., strong patriotism. In addition, the escalating tension between China and the US have also accelerated the pace of domestic substitution. Lastly, booming e-commerce platforms in China play an important role in the process. Key opinion leaders rely on Alibaba's Taobao platform, Douyin, and Kuaishou to do live streaming for marketing and selling products. Domestic brands have been generally more agile and adopting digital trends faster than their foreign competitors. Asia is becoming one of the largest consumer markets in the world. And more importantly, it is the market with still a low penetration rate, i.e., untapped potential. And thus, this will provide opportunities for both local and foreign brands. Yet, we just want to highlight that local brands are getting more competitive each year, which gives us more interesting and attractive investment opportunities in Asia. Thank you for your time.